All right, guys, today is day 3, and we will be looking at the HPLR trade and flow plan. It will be riding on day 1, risk, and day 2 that we discussed yesterday. We will be utilizing them today. And key of all of them all is day 1. Remember, I said, whatever strategy you learn, they must have some components, certainly, which we discussed in day 2. However, if the strategy doesn't take into cognizance the risk that is inherent in the market, you'd eventually lose money and blow your account. So every strategy has got risks, and I'm not teaching you guys a strategy that doesn't have, that doesn't lose. In fact, this strategy does have losing streaks, right? You might lose 2 to 3 trades back to back to back. But we have been using this strategy for a while now. We've been withdrawing from prop firms practically every month. We've been growing our accounts and feeding our families, helping loved ones and even people we don't know. And that's what matters. In trading, you need to identify why you are trading. I'm into trading not to be right. I'm not in trading not to be, I'm not trading because I want to be right. I'm trading because I want to make money. So if I need to be wrong 3 or 4 times out of 10 just so I could make money, so be it. I don't care. I'm not in business. I'm not in the trading business to be right. I'm in the trading business to make money. Second thing I'm not in the trading business to do, I'm not in trading business to stroke my ego, which is why I seldom, except maybe when we're marketing some fostering program and I show my results. I don't have to show my results to strangers. I mean, if you think Bishop is a very good trader, how does that change me? How does that add anything to me? What does that do to you, right? So trading is not a place to massage your ego. The market will humble you very, very fast. If you want to massage your ego, go massage your ego somewhere else outside of the charts, right? So again, in summary, this strategy will have losing streak, not just one. It could have 3, 4 back-to-back losses, but you eventually win when you take a sizable sample from your trades, right? So we'll go straight up now into the charts and begin to look at HPLR. So yesterday, we ended by saying that the market will move in only 2 ways. It's either it moves upwards in a fast manner, or it moves downwards in a fast manner. It moves up or down in a fast manner, or it moves up or down in a slow manner, right? So when it's moving up or down in a fast manner, we say it is creating, let's say it was moving up, in a fast manner, it's creating an uptrend. And if it's coming down an equally fast manner, we say it's creating a low trend. And then if it's going up or down without necessarily picking a direction, and we say it is consolidating, so we'll have something like this. Right? It goes up, it comes down, goes up, it comes down, right? We say it is consolidating. This is not the time to define the uptrend or downtrend or number of points that makes up an up or down. That will just make this lecture too long. But this was where we ended yesterday, right? So we'll continue from here. Now, one of the rules in trading is that the trend is your friend. Meaning, if you trade in line with the trend, the probability, again, probability means that there are more than one outcomes. If there's only one outcome, then it becomes a certainty. If there are more than one outcomes, then it is a probability, right? So the probability that you will win if you trade in line with a trend is higher. And let's just look at this schematic on the chart on the screen. With you were here when I drew it. I practically just drew it haphazardly. Now the length from 0 to 1 is practically higher and bigger than 1 to 2, right? Ditto for 2 to 3, longer than 3 to 4. Usually in trends, without necessarily explaining the nitty-gritty of Elliott waves, usually the impulse moves, which are the moves from 0 to 1, 2 to 3, and 4 to 5, are usually longer and more extensive than the correction moves, which are the moves from 1 to 2 and 3 to 4. So mathematically, and of course probability is mathematics, you stand a better chance of making more money, all things being equal. Let's say you have the same stop loss, the same lot size, and all the other things. You have higher chance of making more money if you're a buyer in this stretch, right? Because you make the price will move, more in one direction than lesser in the other direction. You have the tendency of making more money if you're buying. Then if in a downtrend, you have the tendency of making more money when you are selling, right? For a range, the rule is different, right? Now, since the rule is different usually in a range, we want to spend most of our time looking at a trend following strategy. And a trend following strategy, you want to trade in line with the trend. Now, just like the name suggests, a trend following strategy, your number one question is, if I say something is a trend following strategy, what do you think your number one question will be? Somebody type in the chat box. Let's get this house. Let's be sure that we're together. What should be the number one question you ask? Type in the chat box a trend following strategy. What should be the number one question then? If something is a trend following strategy, what should then be the number one question? Right. Yes. Thank you, Donna. What is the trend? If your strategy, thank you, Daniel. How do you determine the trend? If your strategy is to follow a trend, then it's just natural for you to ask, what is the trend? How do I determine the trend? What trend is it? Right. So thank you, guys. You got that part right. So from my perspective, now what is the trend? How do we get the trend? That becomes the big question. Now, in my years of trading, I've come to discover that using the naked chart, again, if you are here, don't let some people bamboozle you and make you feel sad and make you feel like your chart isn't naked and theirs are naked and therefore they're the better trader. Again, nobody pays you for trading naked charts. But naked chart means like what is on my screen. It doesn't have any indicator, right? When you see things like this on your chart, some people say your chart is no longer naked, that it is clothed with indicators. And sometimes they try to deride you simply because you have indicators on your chart. Personally, I know people who have indicators on their chart and the indicators look like, so many indicators, you could barely see the candlesticks and they still make money. Again, purpose of trading is to make money, right? But if you take a naked chart, basically, one big problem people find is finding difficult to determine what the trend is, right? There are times where the trend just looks so haphazard and you can't really say if you were buying or selling. Another thing you need to see here is I want you to get in catching the trend that in a higher time frame, the trend may be bullish, right? However, in a lower time frame, that trend may be bearish. In the higher time frame, it might be bullish like this, whereas in the lower time frame, what you might see, if you're talking about the trend, you can't just state in the time frame of reference. You can't say I'm in an uptrend without stating the time frame of reference. You can't say I'm in a downtrend without stating the time frame of reference. Hence the confusion, right? So if you look at 3 time frames, in one time frame you might be in an uptrend, in another time frame you might be in a downtrend, and in the third time frame you might be in a range. Now the question is, which would you use, right? And so in SimplyPips, we say buyers and sellers can be wrong. It all depends on your entry, right? Or the time frame you're trading from. So I'll give an example. Let's quickly see if we can find an example. Let me call up symbol changer quickly. It makes it easy for us to swap between pairs. Right, great. Okay, so here I am now. I'm going to go to okay, guys. Looking at what we have here, are we in an uptrend? I'm referring to this region here, right? Everything to the right of this. Are we in an uptrend or a downtrend? Put your answer in the chat box, guys. Are we in an uptrend or in a downtrend from what we can see on the chart? Are we in an uptrend or a downtrend? Everything to the right of my screen. Are we in an uptrend or a downtrend? I want you to put your answer in the chat box. Only 2 persons so far, and they gave conflicting answers.
Recording in progress.
Sorry, I lost connection for a while there. Let me check my second device, right? So I can see a lot of people saying uptrend, uptrend, uptrend. Great. So based on the 15 minutes time frame, we are in an uptrend, right? And people who use trend line who draw it in several ways. Maybe they see this as a break, and they finally see this as another break, and therefore the uptrend is resuming, right? They may want to draw something like that, right? This is an uptrend, obviously, on the 15 minutes time frame. Now I'm going to go a time frame higher. Now on the 30 minutes time frame, guys, what trend is this? On the 30 minutes time frame, it will look like you are in a range. It will look like you are in a range, ladies and gentlemen. It looks like you're in a range on the 30 minutes time frame. Right? Because price is basically doing this. And you are not too sure, is it going to come down, is it going to go up? It's looking like you're somewhere in a box. It hasn't made any decision lately, right? It isn't moving fast in a particular direction, which was my definition of a trend, right? Now let's and if we consider this same region, which was where we considered on the 15 minutes, it even makes it look more like a range, right? Now, if I go one time frame higher, now it still looks like a range, like confusion. Now, if I go a one time frame higher, this looks like we're in a downtrend, guys, right? One time frame lower, and we're definitely in a downtrend. One time frame higher, I beg your pardon. We go to the weekly time frame, and we're certainly in a downtrend. I'll go to the monthly time frame, and now it's looking like we're in a downtrend, right? So see that you go to different time frames, you most likely see different things. So here lies the biggest problem for most people. How do I determine my trend? So for the purpose of HPLR, we have different ways of determining our trend in the SimplyPips, but for the purpose of HPLR and the purpose of this back to school program, we will be using one indicator to determine the trend. There are several indicators we use. I'll just show you some of them quickly. We have one we call Just a moment, I'll get it now. We have different items we could use for our trend. This particular one I want to show you guys, it's been in the market for a long time, right? It has different name. They call it full trend. I don't use it because it comes very late, so I don't use that. But that is something you could use to determine your trend. We have one we call sweep scalper. Where is that now? SW sweet spots. Am I in the right folder? No, I'm not in the right folder. No wonder. Yeah. So here we have this. It basically tells us our trend. When it is red, we know we are somehow bearish, and when it is pushing up blue, we assume that we are bullish. But the problem with this one is that it changes too fast. For instance, here it's telling me it painted red somewhere in the middle here, and definitely this can be a downtrend. But if you use on a higher time frame, you can practically see how it helps you to see when you are basically in a downtrend or an uptrend, right? I don't use this, but I used it at some point. I'll be giving this out for free for some of you if you want to make use of it, right? If you use TradingView, there is an indicator you could also use. It's called the BBS, right? It's called the BBS. So you just come to your indicators tab and you find BBS. And how do you find BBS? That's it there. You look for Bollinger Band Stop V0 by Ricardo Santos. Right, you could call that, you could change the settings to 23. You change the settings to 23 and then okay, right? So it paints, when you're in a downtrend, it paints red, and it prints green when it assumes you are in an uptrend, right? HPLR is high probability, low risk. HPLR, high probability, low risk, right? But for the guys in the inner carcass, you know, we use our value line. We use our value line. Just a moment. We use our value, and that's what I'll be using for this explanation. For those in the inner house, you already have it. So we'll be using this for our trend, and let me change the width here to 3, just so it could be visible for everyone watching the recording, for those of you following right here. I'm doing all of this live, not prepared, so you could have a view of how to play around with it, right? So this is what we'll be using. When it prints red, we will assume that we're in a downtrend. And why are we doing this? Because, like I mentioned, sometimes the naked chart, people get confused. We have our own way of looking at the naked chart. We have source, breaker, and all of those stuff. But for this class, we'll be using an indicator. So when this prints green, we will assume that we are buying. And when it prints red, we will assume that we are selling, right? This is what we're going to do. Now, another thing we will do is that, to keep in line with the analogy I gave, our trend will be taken from 4 hours. So we'll be determining our trend from 4 hours. So if I say that Euro USD is bullish, remember I said what you are supposed to ask is on what time frame. If we are trading HPLR, the time frame of reference is 4 hours, right? We'll be doing this on 4 hours, and that will be our time frame of reference, right? So that being said, let me open a new chart. So we'll always come back to this later. Okay, right. So other things we want to consider in building our strategy around the HPLR, because we remember yesterday we mentioned location, we would want to see some indicators on our charts. One of them is yesterday high and yesterday low. So here's an indicator. You can find it in the files section of the SimplyPips Telegram group. Daily high and low indicator. So you see this dotted line here. Let me make it a little bit visible. Let's make it a little bit visible for us to see. Or maybe just make it a little bit thicker, better off. All right. So this line up there, sorry, one more thing. Yeah, okay. The line, the black horizontal line, you notice two letters there, YH, that is yesterday high. Then two letters here, YL, that is yesterday low, also known as previous day's low, and this is previous day high. If I put this is now, there are some vertical lines. You could see some dotted vertical lines. They delineate 24 hours. So from the beginning, from this spot to this spot is 24 hours. So this is the whole of yesterday, and then today started here, and of course we're still in today, it hasn't ended, right? So the highest point, this candles, the highest point it printed yesterday, if I bring a crosshair here, you see that it coincides with yesterday high, right? So it takes the highest point of yesterday and superimposes it on today's candlestick pattern, and takes the lowest point of yesterday and superimposes it on today's candlestick patterns, right? So this line shows us yesterday high and yesterday's low, right? The next indicator we want to have on our chart, just to help us with a concept of high or low, Asia high and Asia low. So here we have Asia high and Asia low. Asia is one of the forex trading sessions. We have Asia, we have London, and we have New York. In Asia, you have things like the Japanese market, the Chinese market, you have the Australian market, you have the New Zealand market, all fall into the Asia session. Then the London session, it encompasses of the Frankfurt market that opens 1 hour technically before London, and the London session itself, we all call that the European market. Short form, we just say the London session. And we now have the New York session. And inside of that, you have things like the Canadian market and, of course, the United States market. We call that the London session. So the Asia session technically starts at the beginning of the day and then ends around the end of this dash box here, right? This dash horizontal line that forms a rectangle. That is the end of the Asia session. So we call this the high of Asia and the low of Asia, right? So that takes us to 3 indicators. So let's add back. So we're going to have 3 indicators on our chart. Let's continue to develop the strategy, right? So what are we trying to do? We're trying to find a way of looking for discounts. Remember, in an uptrend, we want to buy. And if you want to buy at a discount. Discount is point B, right? So let's say price started at $0 or $1, then it got to $5. We're interested in buying this asset. But $5 is the highest point it has ever gotten to after it started from $1. I won't want to buy at $5 because that is expensive compared to $0. I will want to wait for it to drop in price a little, and that will give me a discount. That will give me a discount. I will now want to buy it at a discount, hoping that at worst case scenario, price will get back to point A. If I buy at point B and price get back to point A, at worst case scenario, I would make some profits, even if it doesn't go above A again. I will still make profit at point A. So I don't want to buy at point A because I'm not sure, uncertainty, if it's going to continue to push up or if it's going to come down like it did right now. So I want it to come below A, and coming below A is giving me a discount price for me to buy, with possibility of it coming back to point A or even surpassing point A and getting to point C. And that means I'm in massive profits, right? So I want to buy at point B, which is a discount. How do I measure my discount, right? That's why we're adding those indicators. Second reason why we have those indicators. For those of you who trade BTMM, they have a concept called force move, right? Whether we call them market makers, whether we call them whatever I want to call them, there is a concept that if price wants to go up, it will come down first. And that if price wants to go down, it will go up first. They call it the force move, right? So the guys with the big money will deceive other people that they are going down by pushing price downwards, whereas their intention is to go up. And we see, if you check 5 days, if you check 5 days of the week, this will happen 3 to 4 times. 5 days of the week, it will happen 3 to 4 times. If price is going to go up, it's going to come down first, 3 to 4 times in a week. So it seldom just goes up on a day that it's going to go up. It will usually come down first before going up. Now, when it's coming down, we trend traders see that as a pullback, a discount for, and then it gives us a very good opportunity for us to leverage and then go long. And that's why we're adding those indicators, and we'll see how they come to play right now. So coming back to the charts, I'm going to add our T-Dane again, our trend to this. Where are you? We're going to add a trend again and quickly do what we did in the past. Quickly. I think I'll just save this as a template, so can always come back to it. 23. Now save this as a template, so can always pick it back. Set. Okay, great. So it's saved. I can always come back to it. So that's what we're going to do. And remember, we're watching our trend from the higher time frame, right? So I'm going to go back to H4, and we're going to do some things together. But before doing this, so that it doesn't look like I'm cherry picking, I want you guys to drop the pairs you want us to work on in the chat box. Drop the pairs you want us to work on in the chat box. I'll pick 3 pairs. We'll look at them and we'll call it a day. 3 pairs, ladies and gentlemen. 3 pairs. Put them in the chat box. I have Euro USD in front of me here. Put 3 other pairs in the chat box, guys. So we have NU, GU, and AU. Can we have other pairs so that it doesn't look like everything is USD? Let's add other pairs. Yeah, I see NU, GU, and AU. Let's mix it up. Okay, I can see GJ there. One more. Somebody also mentioned gold. All right, it's okay. Let's go ahead and see how we play with this. Now, this is 4 hours, right? And this is what we're going to do. We're going to put a vertical line at the inception of the indicator telling us to buy. This indicator telling us to buy happened on this green candle, right? So, and we don't trust the candle until it closes. So after this candle closes, this big green dot appeared. So we're going to modify this to green. So we know we start looking for buys after this green line, right? Do we have another buy? Oh yeah, we have another buy here. So here we have another buy. We're going to start looking for buys after this. Do we have another buy here? Oh yes, we have another one. We start looking for buy. Yep, after this. All right, now so let's go and look at our cells. Yeah, we got a cell here. And now, so we know that we're looking for cells. We will shift this to orange red. To have a cell, then we stopped selling and started buying. Then we stopped buying and started selling here. And we stopped selling and started buying. So we did this on H4. We've been able to determine our trend on the H4, and we started from this date here, which is the 30th of December. So I'm going to go to 30th of December now on 30 minutes. I'm going to 30 minutes, and I'm going to look for 30th of December. So 30th of December, 30 minutes. Here, I guess this isn't going that far. Let's increase the number of bars. Yeah. So this is 30th. We started looking for buys. Ladies and gentlemen, we started looking for buys. I'm going to technically hide this so we can only see it on 4 hours, right? So this was when we started, right? What we want to do is that we know we are buying. From 4 hours, this had already told us we're buying after this push to the upside happened. Our indicator told us, guy, you are now in an uptrend. Don't sell any longer. Start looking for buy, right? Let's go frame up, complete the frame up of our strategy. So what we're going to do is that since we know we are in an uptrend, our indicator would have told us we're in an uptrend from after 0 to A happened. After O to A happened, our indicator will tell us, guys, you're looking for buys, but we won't buy from A. We would wait for B to happen before we buy. What is B and where is B on the chart? And at what time of the day should we be looking for B, right? So what is B? Where is it on the chart? And at what time of the day should we be looking for B? We'll answer those questions. So B is for in the case of a buy, B is going to be Asia low and yesterday low. So if we want to buy, we want price to come back to Asia low or to come back to yesterday low. Then and only then would we be looking for reasons to buy. So we've answered what B is. B is Asia low, yes, and yesterday now answered where we can find it on the chart. The indicator will tell us that. At what time of the day? Obviously, if it is Asia low, it should be after Asia, right? It should be after Asia. Anything after Asia to the next Asia beginning, right, is our time of consideration. Asian low and yesterday low, or Asian low and yesterday low, Asian low and yesterday low, or Asian low, yeah, any of them, right? So you have to choose which one works best. Some persons do only Asia low, some persons do only yesterday's low, and some persons do both Asia low and yesterday low, whichever comes first and whichever gives a setup, right? There's difference between a setup and we'll define that later on. Let's not bug ourselves. So here you see we were bullish. Again, I'm going to go back to H4 so you can see. On H4, after we've had these 3 bullish candles, 1, 2, 3, our indicators say, hey, you're no longer selling, you should be looking for a buy. And then we had this green line. So on 30 minutes, our green line appeared after that massive bullish. Those 3 bullish candles we saw on H4, right? Here they are. The 3 bullish candles we saw on H4 was what created this massive move. After this move, this is the 0 to A, we are now waiting for price to come to B, right? Remember, we have 0 to A already. We will now be waiting for B for us to buy, right? And this is our B. We wait for it to drop. But remember the definition of a discount. This was the highest point price got to before. This was the highest point price had gotten to before. So B technically, or discount technically, is anywhere below A, anywhere below the highest point. It simply means this could have been B. This could have been B. this could have been B. And of course, this could have been B. So where would we be buying from? Right? And we can't just say B is anywhere. Where specifically? That's why I said we're going to be asking where and how. We've answered the how. The where is below Asia low or below yesterday's low. Right? So notice what price did. Price came below Asia. Hola. Very good. Price came below Asia. And when it came below Asia, we would look for certain candlestick patterns. And maybe I should just cover that. So we'll do that all at once. I have a visitor now and I need to wrap up soon. So when price takes out Asia low or yesterday low, we wait for a bullish candlestick pattern. And there are several bullish candlestick patterns we can look at, but we will focus on only two, right? We'll be focusing on an engulfing candle. So let's say you had a bearish candle coming to the downside, then we want to have a bullish candle to the upside. We have a bullish engulfer. So they were selling the last bearish candle or the lowest bearish candle. You have a bullish candle that closes above it. We say we have an engulfing candle. Why? Because we have a bullish candle closing above the bearish candle. We say we have an engulfing candle. The second candlestick pattern we want to look out for is the bullish inside bar. Right? So if you're having a bullish inside bar, you have a bearish candle coming down, right? And then you have a bullish candle but the bullish candle didn't close above, so it's not an engulfing candle, right? So technically, this becomes your mother candle, right? The big red candle becomes your mother candle, and you have your baby candle, which is the small bullish candle, right? So sellers were selling, buyers came in, but they could not eclipse the sellers, and then you were waiting, and eventually we had more buyers coming in, right? And now these two candles put together have now eclipsed the bearish candle. This is a bullish inside bar, right? This is the inside bar, but it becomes bullish because it was confirmed for a breakout. Then our buy will be at the tip of this last bearish candle. Our buy limit will be at the tip. In this case, our buy limit will also be at the tip of the bearish candle. These are the two candlestick patterns we are interested in. Let's come back to the charts. So price took out the low. We have the last bearish candle is this, but this candle, again, never trust a candle until it closes. At some point in the lifespan of this candle, it should have looked like a bullish candle, but then it came back, boom, and came and closed like a bearish inside bar, and bearish and doji. So price kept coming down, price kept coming down, price kept coming down. Can you see this candle? This is the lowest bearish candle, right? This candle here is the lowest bearish candle, and price closed above it. Boom! Now we have our buy. Now we have our buy. So we're going to get into the trade for a buy. We'll put our entry at the tip there, right? And our stop loss some pips below. I will identify that later. Our stop loss will be some pips below this lowest bullish candle, right? So somewhere like that. So you see price came back for us later on, TP1, TP2, TP3. We're done. We're done with this trade. The trade has ended at TP3, Sefini, close for that day. We come back the next day. We're still looking for buys, ladies and gentlemen. And what can you see? Price took out Asia low again. Price took out Asia low again. And what do we see this time? This candle closed above the lowest bearish candle. You see that? We have a close below the lowest bearish, above the lowest bearish candle. Boom. Once this candle closed above the lowest bearish candle, what do we do again? We stage our entry. We stage our entry, right? Our stop loss somewhere slightly below. Price came, picked us back, boom, gave us TP1, TP2, TP3, TP4, TP5, TP6. Whoosh! Winning trade, guys. So we look at again for the next one. Price, we're still bullish. Price took out Asia low again here, right? Price took out Asia low again, but what was the lowest bearish candle? This price took it out, and then we staged our entry for a sell. We staged our entry for a sell, for a buy, I beg your pardon. Price came, picked us, whoosh, hit our stop loss. And when it hit our stop loss, what do? On the box, on the school bus, we win triumphantly and lose gallantly. We accept our losses and move on. By the way, you would have won 3R 2 times. If you win 3R 2 times and you lose 1R, you are up 5R, ladies and gentlemen. You are up 5R, right? So you are still a winning strategy for you. Then after taking out Asia low, it hit your stop loss. It came back to take yesterday's low, right? It came back to take yesterday's low. So if you are still in the market, of course, around this time, we will not be in the market, but I'm just giving this as an illustration. However, I will give you the time frame that you should come in. We call it the kill zone. I will give you that time frame later on. But let's say you still insisted you want to take this trade. It took out the Asia low and the yesterday low and then closed above. You would have staged your trade. It came back, picked you, hit TP1, then hit your stop loss, right? Then you would have lost, you would have broken even or something, depending on your trade plan. Again, we'll discuss trade plan. So the next day, again, it took out Asia low here, and you would have been planning to get in. It went, it took out, it came back, picked you, and maybe hit your TP1, depending on where your stop loss is. We've not defined that yet. I'm just explaining the concept. And then it came back to hit your stop loss. So you would have won 1 and lost 1, no problem. But it came back again and took out yesterday's low. And then you would have focused on yesterday's low. And this was the lowest candle there. It broke out, came back, and in 2 or 3 candles went straight to TP4. And if you held on, it went even up to TP6. Again, you'd have been a winning trade. Now remember, some persons won't take Asia low, they'll only take yesterday low. Remember, some persons won't take yesterday low, they'll only take Asia low. And of course, remember, some persons will take both of them and they'll tell themselves, I'm willing to take the trade 2 times a day. If I lose it twice and then I'm done. I'll take it at Asia low, I'll take it at yesterday low. If I lose both trades, I'm done, right? So far, so good. Are we winning in this trade, with this strategy, or are we losing? Guys, put your answer in the chat box. So far, so good. Are we winning in this strategy, or are we losing? Put your answer in the chat box. So far, so good. Are we winning in this strategy, or are we losing? All right, thank you. Second question. Stop answering to the first question so I don't mix it up. So far, so good, this strategy. Is it a 100% winning strategy? Put in the chat box. Is this strategy a 100% winning strategy? No, but we're making money, right? But we're making money, which is why I keep telling you, stop hopping around Telegram groups, stop hopping around Instagram channels looking for guys who are going to give you the Holy Grail strategy. If they have a Holy Grail strategy, they should go buy the Bahamas, right? There is nothing like that. There's nothing like winning 100% of the time. You would lose once in a while. Even if it's a 97% win rate, like IPC is saying they have, the point is that there is a 3% losing, right? You're going to lose about 3% of the time, right? So again, this is a winning strategy. Yeah, let's look at this time again. It came back again and took out the Asia low. Again, you would have been thinking of getting in somewhere around here. And this was somehow a winning trade. It came back and boom, you won that trade. It came back again, took out Asia low here. And then you guys trading Asia low would have had an entry here and it had hit their stop loss miserably. And then it came back for yesterday low. Look at it, took out that yesterday low and immediately took out yesterday low. It started going up. Unfortunately, we would not have gotten an entry here because price didn't come back to this zone. But what about this day? Oh my, this day again, it came back straight for Asia low, guys. Straight for Asia low, took out Asia low and disappeared. Again, we will not have had entry on this day, except if you are using the moving average entry. I won't be discussing entry today because I have some visitors and this webinar is not going to be for 2 hours like we used to have. It's going to be 1 hour and then we'll be done. But we would touch at we would touch the entry and the trade plan tomorrow before going into IOF. Right. So here again, we didn't have entry for 2 days, and you must be comfortable not having entries. If you chase it, if you say, oh, this thing didn't come back, and you run and come in here, what if price now decides to come back? right? You hate yourself. So just let it run, right? So you've lost 2 days, or not that you've lost, you've missed out on 2 days. What about this day here? What about this day? We're still buying, guys. This is the lowest bearish candle. Price took it out. Price came back, picked you. Oh my, oh my, oh my, oh my. This gave you TP whatever. TP whatever, right? TP whatever I gave you, right? Now, this day, no trade at all. It didn't come back to Asia low and didn't come back to yesterday low. This day came back to Asia low, but it didn't give you an entry. An entry condition is that you must have a bullish candle closing above the last bearish candle. It didn't give us any of those entries until much, much later, right? So if you were still awake and you decide to take this trade, good for you. If you took the trade, it came back and went for TP1, TP2, then came back to hit your stop loss. And then if you took the second one, it pretty much just went back for your stop loss without telling you sorry. And when it went back for your stop loss, it continued to go for your stop loss without giving another entry the next day until you woke up and then the bias is now bearish. You see that red line? It means we are now sellers. So from now henceforth, we will stop considering Asia low and yesterday low. We will start considering Asia high and yesterday high, ladies and gentlemen. Right? So this day, it took out Asia high, no close below. It took out Asia high. This is the highest bearish candle, no close below. Then we had one here, a close below, and would have gotten in, boom, hit our stop loss. Sorry for our loss. We lost one trade in the sell. What about the next day? The next day, this was the highest bearish candle, took out Asia high, boom, and then you came in and then gave you an entry and you'd have sold to the downside. You practically would have made up for all your losses. You lost one and then you made like 4 or 3 hours the next day. You made up for your loss. Then on this day again, it gave you some losing trades. This was the highest bullish candle. It closed below, you got in for the trade and then you lost that one. Then the second one, the highest bullish candle, you got in again and this made up for all your losses. This made up for all your losses and even more. Whoosh! Right? This day no entry. This day no entry. Those of you who have been following us in SimplyPips, we have an entry technique we call the RCE, the retracement continuation entries. You would have gotten your entries here, but we are not going to be considering that in this webinar. So here you have the highest bullish candle here. Price never came back to close below it. So you don't have any trade here. You have a trade here and you took it and then you hit your stop loss. Sorry for your loss. Sorry for your loss. Right? This is supposed to have changed. What happened? Did I delete something? All right, it didn't. So this is a clear example of where I say you could have back-to-back losses, right? This is a clear example of where I say you could have back-to-back losses. You would have lost here, and then you would have lost here, 2 back-to-back losses. Again, it still hasn't eclipsed all your winnings. It still hasn't eclipsed all your winnings, and now we are back to sell. And then we'll begin to look for Asia high or low. Ladies and gentlemen, I want to stop here because I have some visitors and I need to attend to them. Traders rarely get visitors, but when they do, we are happy to have them around. So here I will put a stop to this recording.